that, and it's addressed related party transaction, which is a significant ISA. So today we're looking at also a significant ISA, and which it's very important to emphasize that this ISA makes management to have written representation and not just oral or verbal representation. So we're summarizing ISA 550 on written representation. Written representation is the most, I won't say valuable, but most reliable evidence that is sufficient during the audit work. It's very important. So written representation emphasizes that while representations from management are necessary form of evidence, they are not sufficient on their own to support conclusions on financial statements. So aside written representations, the work has to be done to have substantial evidence to conclude or provide assurance to clients. This standard clarifies that auditors must obtain written representation confirming management's responsibility, including the preparation of financial statements in accordance with the applicable financial reporting framework, ensuring access to all relevant information and properly recording transactions. So management's responsibility and every other dialogue and correspondence that transpires between the auditors and managers in the course of the work must be in writing. That is what this ISA is emphasizing. So verbal or any other form of email conversation that is not written, either typed in Microsoft Office suite and signed by both parties, is not legally binding. So it's very important that management auditors take or acquire written representations from management. So for example, the standard clarifies management's responsibility in writing, which includes preparing financial statements, for example, based on IFRS, giving them unrestricted access to relevant information, and also properly recording transactions. These are the responsibilities of management and should be provided as stipulated in writing. If management refuses to provide such representations in writing, the auditor should consider disclaiming an opinion on the financial statements due to insufficient evidence. So we have 4 types of reports. We have the clean report, which is uncodified. We'll be coming to that in subsequent chapters. We have the qualified report, which is unclean. Then we have the disclaimer. There's the adverse opinion, but the disclaimer, there are 4 kinds of report an auditor could issue. So a disclaimer, like we see in case study, is disowning any other external party from using your information. But in audit, a disclaimer of opinion is stating insufficient evidence. So there's a disclaimer. This is why we are issuing a disclaimer. It's neither a clean or unclean or an adverse opinion. We are just stating that we didn't have sufficient evidence to guide, either to provide a clean or an unclean report, or to state whether we can continue this job. So if management does not provide written representations, the auditors should consider disclaiming the opinion of their report. It's very important. So that's the summary of ISA 580. So the responsibilities must be stated so that management don't deny any of their involvement in any conversation with auditors, and that is enough evidence for them to write their report. And where management has complied with written representation, then they can go ahead and do their job sufficiently. But where this is not provided, disclaimer of opinion is the next option to carry out. Okay, so that's a short summary on ISA 580. I don't know if you have any question, any observation before we go into the short test. Any question?
It's so short.
Yeah, it's very short. These are summaries. We've talked about the long aspects, so this short summary is to recap, just a recap, and for us to remember what it's about. It's very succinct and very clear. So I believe you caught the thoughts on the main points. So can we go to our quiz now? I can't wait to start the quiz.
Yes. Yes.
Okay, fantastic. All right. What is the primary purpose of written representations in an audit? A, to replace substantive audit procedures, to serve as conclusive evidence for financial statement assertions, to support other audit evidence obtained during the audit, to allow management to avoid providing supporting documentation. What is the primary purpose of written representation in an audit? So I have only J on the call for now. What is the primary purpose of written representations in an audit? To replace substantive audit procedures, to serve as conclusive evidence for financial statement assertions, to support other audit evidence obtained during the audit, to allow management to avoid providing supporting documentation. What's your
C.
pick? Huh?
C.
Final answer.
Good though.
Once I see final answer,
Okay. Sleep is still in my eyes, honestly.
Yeah, you need to maybe walk around.
I think so.
Yeah, so maybe pick your phone and just walk around.
I'm supposed to see.
Okay, final answer. Final answer C. All right.
According to this B and C, they are so tricky. I'm sorry, if you don't mind, can we go back to it, please? If you don't mind.
Okay, sure. I'm back to it. So B is calling you, C is calling you. So you have to eliminate one. B is calling you, C is calling you. You have to eliminate.
I think B is more likely. B is okay.
Final answer.
Yes, final answer. B.
Okay, she has changed her mind from C. All right. Number 2, according to ISA 580, if management refuses to provide written representation, the auditor should A, issue a qualified audit opinion, B, proceed with the audit using alternative procedures, C, disclaim an opinion on the financial statements, D, ignore the refusal and continue the audit. According to ISA 580, if management refuses to provide written representations, the auditor should issue a qualified audit opinion, proceed with the audit using alternative procedures, disclaim an opinion on the financial statements, ignore the refusal, and continue the audit.
Okay. Claim an opinion on the financial. Claim an opinion on the financial statements. Okay. C.
What's your answer? What's your pick?
Issue qualified. This one is difficult too.
It was there in the lectures, in the short.
I know. I thought I was sleeping mostly. Sleep was just finishing me.
So you may have to guess now.
C. Wait, is it possible to disclaim an opinion on the financial statement? Is it possible to do that?
I'm the examiner, so I cannot tell you the answer. You have to.
Not now, right?
Not now, later. Final answer C.
Yes.
Okay. Number 3. Which of the following is a required written representation from management under ISA 580? A statement that the auditor is responsible for preparing the financial statement. Confirmation that management has recorded all transactions in the financial statement. Assurance that the audit procedures have been properly conducted. A representation that the company has sufficient cash reserves. Which of the following is a required written representation from management under ISA 580? A statement that the auditor is responsible for preparing the financial statements. Confirmation that management has recorded all transactions in the financial statements. Assurance that the audit procedures have been properly conducted. a representation that the company has sufficient cash reserves. What's your pick?
Okay, C.
Final answer.
Yeah.
Okay, number 4. How does ISA 580 clarify the use of written representations as audit evidence? They are the only necessary form of audit evidence. They are necessary but not sufficient on their own. They must be obtained only in high-risk audits. They replaced external confirmations. How does ISA 580 clarify the use of written representation as audit evidence?
They are necessary, but not so. They must be obtained only in high-risk audits.
So B and C now, which one are you picking?
B.
B?
C.
Okay, C. Final answer.
Sorry, B is final answer.
Okay, B, final answer, not C. All right. What should an auditor do if written representations provided by management are inconsistent with other audit evidence? Accept the written representation as correct. Ignore the inconsistency if management insists. Investigate the inconsistency and seek further evidence. Immediately issue an adverse audit opinion. Okay, final answer.
Yeah.
Final answer C. All right, judgment D. Let's go. What is the primary purpose of written representations? The answer is C. And you picked B. You actually said C, but you changed your mind. You changed your mind and went for B.
What does B say? What does B?
B, the answer is they are not conclusive on their own and must be corroborated with other evidence. So B is incorrect. You said they are on their own. So C is the answer. The primary purpose of written representation is to support other evidence obtained during the audit. Exactly. So written representations serve as additional supporting evidence but do not replace other audit procedures. They help confirm management's responsibilities and assertions about financial statements. Exactly. Yeah. You actually chose C first, but you changed your mind. So you're away from
Okay.
Number 2, you got it. According to ISA 580, if management refuses to provide written representations, the auditor should disclaim an opinion on the financial statements. Exactly. A refusal to produce or provide written representation is a significant limitation of scope. Since the auditor cannot obtain sufficient appropriate evidence, the proper response is to disclaim an opinion. Exactly. That was correct. Number 3. Oh, she failed it. Which of the following is a required written representation from management under ISA 580? Yeah. So you chose C. C is incorrect. The auditor, not management, is responsible for determining whether audit procedures are properly conducted. Exactly. So audit procedures are done by the auditor and not management. So B is correct because confirmation that management has recorded all transactions in the financial statement in writing is a requirement under ISA 550. So ISA 580 requires management to confirm that all transactions have been properly recorded in the financial statements. This ensures that the financial statements provide true and fair view. Are you there? I hope you didn't doze off a bit.
I know, I'm just in shock, you know.
Yeah.
I feel this one very well. Hey, God have mercy on me. Hey.
You've dropped 2 points now. Okay, Number 4, how does ISA 580 clarify the use of written representations as an audit? I think somebody is trying to...
Let's feel this one.
Somebody is trying to join. Okay, Aisha is trying to come on.
Aisha.
Yeah. Okay, so number 3. Okay, number 4, B. I think you got this one.
I
How
thank
does
God.
IAC 5
Hey, child.
how does IAC 580 clarify the use of written representations as audit evidence? B, they are necessary but not sufficient on their own. Exactly. So IAC 580 states that written representations are necessary for an audit but cannot be the sole basis for an auditor's conclusion. Other forms of audit evidence must be obtained to support financial statements. Exactly. So you got it. Okay, so let's welcome Aisha on the call. Aisha, you're welcome.
Okay, good evening, sir.
Evening, nice to have you. Aisha Rualapia.
That's right, sir.
You're welcome.
Okay, yeah, breaking the fast. Yeah,
Yes.
eating.
Yes.
Well done. It's not easy.
Telling you after a long day of work.
After a long day, child, they try you.
Thank you.
Well done.
ICAN is really a sacrifice we are doing, and it will pay the best dividend interest later.
Amen.
Exactly.
Yeah. Thank
Okay,
you.
so Julie is on. We are on the first ISA 580. So Julie is not doing bad, even though she's not scoring 100%.
I'm doing that. Child.
She's
You
not
thought I
scoring
was
it.
sleeping.
She's not scoring
no.
100% yet. So I'm a bit smiling. I'm smiling.
I'm not happy at all.
I know. The next.
And very tricky. This ISA 580 is very tricky.
Exactly. In fact, most of the ISAs are tricky. And after this, I think just 2 more ISAs and we are done. Okay, so let's look at number 5 now. We've done number 4. Let's see number 5. Wash. Okay, sorry, you're trying to say something. I think
no,
network
actually, number 5. I was just hoping that I will get it since it's the last one to determine whether I'll fail or pass.
Okay. You're just always doing that 60%. You have not gone below 60% at all, which is very good.
Hey, God, I thank God. Chai.
What should an auditor do if written representations provided by management are inconsistent with other audit evidence? You got it. Investigate the inconsistency and seek further evidence. Yes. So the auditor must critically assess any inconsistencies between written representations and other audit evidence. Additionally, procedures should be performed to solve or resolve any doubts. Nice one. So you have 60%, so 3/5 you tried. So you're trying to say something on the standards.
No.
Okay. So let's move to ISA 600. And I think this is the second to the last ISA before we continue on the conversation. So the ISAs are getting, they are drawing to a close. And I believe when we round up, we'll be able to apply them graphically if the questions come. So you may need to revisit them, just have a look at the summary when I share the slides to help you. So this one is very important, audit of groups or group financial statements. It outlines the responsibilities of group auditors when relying on component auditors. So for large companies that have branches and different segments, different subsidiaries, they will have not just one auditor at the apex or the headquarters. You have component auditors also looking at different subsidiaries or components of the company. It requires that the group auditor assesses whether they can sufficiently be involved in the components auditor's work before accepting the engagement. So before accepting the job, they have to look at the joint audits where other auditors are involved. May not necessarily be the same firm. Maybe joint other work. It may have to do with working with other firms of chartered accountants to review the large group. So they need to assess whether they can work seamlessly with these other component auditors before accepting the engagement. It's very important. ISA 600 emphasizes understanding the group structure, assessing risk, the business risk, audit risk, determine materiality levels of the main group, the group and the components, and ensure proper audit procedures for significant and non-significant components are provided.
Sorry, sir.
Yes,
can you take the slide one? Okay. So it's just one page of pass.
Yes. So this is the first page. This is the second page. So we're looking at the requirements of the group auditors to sufficiently assess if they can work with component auditors, that is joint audits, where one auditor is not in charge of the job. Yes, some jobs are so large that they may require 2 audit firms, 3 audit firms, 4 audit firms. So depending on the work. Yes, please go ahead.
It requires the group auditor. Okay, they want to assess whether they can be sufficiently involved in the component auditor's work. I don't understand before accepting it. I don't understand.
Okay, so most of these group of large companies do joint audits. So the group auditor may need to understand or get sufficient details of the component auditor's work before accepting the engagement. So where other firms are already carrying out the job of either the subsidiaries or the small firms, they need to understand.
Okay, so first of all, is let's say it's a KPMG, is a group auditor now. They want to see whether they can get involved in working with the other small auditors for a subsidiary, like maybe
PwC doing the components. Exactly. So it may be PwC, it may be Mazars, it may be Arthur Anderson, it may be
KPMG is a bigger person now. KPMG is bigger than all of them.
Well, KPMG is in the same rank with PwC. They are all the same Big Four.
Okay, now it's probably the auditor to assess whether they can be sufficiently involved in the component auditor's work before. Okay. Understand before.
Okay,
this
so
sleep will not catch me this time. Hey, I must understand it. You catch me.
So the auditor needs to assess whether those component auditors are in tandem with their standards,
their values. Okay, and their standards.
Their values and their standards, exactly. So if another Big Four firm is doing the component audits, they have to align together. So if it is a medium-sized firm, they have to align together. If it's a small audit firm, they have to align. And where they find significant risk in misalignment, they may have to decline their engagement. So, yes, after the assessment, if they find out, no, we don't align, these people's work will jeopardize our work, then they may have to decline the engagement. But where there is no risk and sufficient evidence is obtained that the component auditor's work is assessed and is fine, then they can take the engagement. And that's what ISA 600 talks about or looks at in ISA.
So just like this guy on accepting it.
Exactly. So it's very important to perform these assessments, whether you are the one in taking initially, that you are the one, the audit firm is the one that started the job or not. So they have to perform this assessment to ensure that the engagement is seamless. This standard emphasizes understanding the group structure. So the group structure and its component is looking at the largeness and the other units, assessing risk and determining materiality levels, and ensuring proper audit procedures for significant and non-significant components must be ensured by the group auditor. So this standard is speaking to the fact that materiality levels must be determined by both components, and for the significant ones and for the insignificant ones, they must be determined together. It's very important. So there is no working in silos. They have to work in synergy to achieve one aim, and the materiality levels must be assessed together with both firms. So they have to come together. Nobody is working in dichotomy or working on their own. It has to be a joint and seamless audit with both objective to have a good audit performed. So the group auditor must evaluate the components auditor's competence also, and ethical compliance while actively participating in risk assessment and key audit areas. So the group auditor must perform risk assessment, looking at the competence, how skillful, how qualified the component auditors are. If it's a joint audit, they must be sure that whoever they are performing this work with is in compliance with ethical standards, and also key audit areas and risks are identified together. So
Who
where
normally
the
who normally appoints the component auditors? Who brings them in?
is actually the board of directors.
Okay.
So the board of directors appoints based on the appointment of auditors we saw in the same chapter 2. Then the group auditors are the ones to assess their competence. So the board of directors appoint based on maybe the recommendation of the directors of the company. And where they are recommended, the group auditor has to, since they are the leads, they have to ensure the risk assessment.
If they don't have a tick from the group auditors, they will not use them. They won't use them.
Yes,
That's what it means.
Yes. If they don't have a tick from the group auditor, they may not use them. So the directors may want to use 2 big fours, and most big fours are comfortable using big fours. But where maybe they want to cut cost, the directors decide to, or the board of directors decide to, not even the board of directors, the shareholders decide to appoint a medium-sized audit firm for component units or subsidiaries. The auditor may not feel those ones are competent. The group auditors may feel those ones are not competent enough, and they can decline the engagement because of that. Yes.
So refuse.
Huh?
If the shareholders refuse, what will happen?
Yeah, so if the shareholders refuse, they may go for another big audit firm. So there's 4 of them. So they have options. They can go for the big 4, another one if the other ones decline.
Okay.
And so the big 4 may also decide to advise that, okay, can they use the big 4, another big 4 for the component audits? So where the shareholders maybe are trying to cut costs or for one reason or another refuse, then the big 4 have the group auditor has the choice to decline the engagement. But the most important thing is alignment. They must be aligned together in performing the audit from start to the end. What the group auditor is afraid of is auditor's liability. Where there's a failed audit, the group auditor is liable and can be susceptible to fines, vulnerable to penalties. So they are very careful. And also the board of directors always help, maybe recommend to the shareholders that, okay, these are the audit firms that may be capable to do the job. And during the risk assessment, the group auditor needs to actively participate and understand the competence of whoever they are giving. So like you also opined one time, we're talking about the staff strength or the staff capability of most of these big 4. If you look at most medium-sized firms, most of them are even much more experienced than these big 4 because they use very, very young guys to carry out their audits. So most of the time, the experience and competence also of the group auditor can be questioned because of the skill of those they are using. Though most of the partners in charge of group audits do the job directly, but when they have smaller companies, they just assign their staff to go ahead and do the job. But then what's important is let the job be done adequately, audit procedures performed, and every gray areas are brought to light and the audit is successful. That's the most important thing. So thanks for your questions. Oh, that's even a summary of the group audits. But then in a recap, I think we have Ife on the call. You're welcome, Ife. Nice to have you. Just by way of recap, it's ISA 600 group audits. So mostly we have the group auditor and the component auditor, and both of them have to be aligned to do the job seamlessly and properly without any hitches. The group auditors should assess the competence of the component auditors, and where is a joint audit, the joint audit should be done in synergy and there should not be any misalignment or any significant risk of either coverage or missing any scope in the audits. This is very important. So I love your questions and your contributions, Julie. That was good to put a lot of context to some of those gray areas. So please also always feel free to interject where some things are not clear, because when you are clarified, you'll be able to write your exams seamlessly. Okay,
Yeah.
so any questions before we go to our test quickly? If once again, you are welcome. Can you hear us?
Yes, I can hear you, sir. Thank you, sir. Good evening, everyone. Good evening, sir.
Good evening. You're welcome to the call. Nice to have you. Okay, so I believe you got some thoughts on IC 600, audits of group financial statements. Okay, so let's run to our quiz to test our understanding. When deciding whether to accept or continue an appointment as a group auditor, what must the auditor consider? A, the ability to rely entirely on component auditors' work. B, the need to perform separate audits for each component. C, whether the group engagement team can be sufficiently involved in component auditors' work. D, the independence of the parent company management. When deciding whether to accept or continue an appointment as a group auditor, what must the auditor consider? A, the ability to rely entirely on component auditors' work. B, the need to perform separate audits for each component. Whether the group engagement team can be sufficiently involved in component auditors' work. And D, the independence of the parent company's management. I think this is true.
I'll go with C.
C.
Okay, Joe is going with C. A is going with C. I, what are you going with?
Just joined.
I just joined, though I would go for B.
Okay, so you're guessing B since you just joined. All right. It's fine. Is that your final answer or you want to change your mind?
Oh no, I'm not changing.
Okay. J, is that your final answer?
Yes, it is, please.
Okay. Number 2, why must the group auditor obtain an understanding of component auditors? A, to determine if they will comply with ethical requirements and possess professional competence.
Yeah.
So fast.
The answer is clear.
To delegate all audit responsibilities to them. B, to ensure they use the same audit methodology as the group auditor. C, to avoid reviewing their work. D, are you sure it's not C? You are sure of A?
It's A.
It's A. Yeah.
Okay. J is going for A. A is going for A. I, what are you going for? What are you guessing? I guess you should make a pick.
A, sir.
You're also going for A. All right. Number 3, what must the group auditor determine for each component when component auditors perform an audit or review? What must the group auditor determine for each component when component auditors perform an audit or review? A, the type of audit report to be issued. B, a materiality level for the group and each significant component. C, number of auditors to be assigned. D, the reporting framework used by the parent company. I had somebody say
B.
So J said B. Okay.
B, yeah.
A, I, what's your pick?
Who was the group auditor? Sorry.
B, sir. B, sir.
Okay, I is going for B. All right, A is still reading. What must the group auditor determine for each component when component auditors perform an audit or review? A, the type of audit report to be issued. B, a materiality level for the group and each significant component. C, the number of auditors to be assigned. D, the reporting framework used by the parent company.
B. It's B.
Okay, A is going for B. All right. Number 4, what audit procedures are required for a component of individual financial significance? What audit procedures are required for a component of individual financial significance? A, an audit of its financial information using component materiality. B, a review engagement by the component auditor. C, no procedures if the component financials are consolidated. D, only analytical procedures at the group level. What audit procedures are required for a component of individual financial significance? A, an audit. B. Okay. B, A is picking B. A, an audit of its financial information using component materiality. B, a review engagement by the component auditor. C, no procedures if the component financials are consolidated. D, only analytical procedures at the group level. Are you changing your mind, A?
Yes, I'm going for A.
You're going for A, you changed your mind. Okay, J, what's your pick?
I'm still looking.
All right, I, what's your pick?
You thinking, sir?
All right.
Okay.
What other procedures are required for a component? A.
Okay, J is going for A. So we're waiting for I. What audit procedures are required for a component of individual financial significance?
I'll go for A, sir.
Okay, we're going for A too. All right, finally, for significant components, what level of involvement is required from the audit engagement team? A, minimal involvement as long as the component auditor provides a report. B, full control over the component auditor's work. C, involvement in the component auditor's risk assessment to identify risk of material misstatements. D, no involvement if the component auditor is independent. For significant components, what level of involvement is required from the group engagement team? A, minimal involvement as long as the component auditor provides a report. B, full control over the component auditor's work. C, involvement in the component auditor's assessment. Okay, J is going for C.
Yeah, same here. I just wanted you to finish reading.
The A is going for C. All right. We're waiting for I now. What's your pick? For significant components. Okay, I is going for B. Tricky question. Okay, CBC, final answer. All right, let's go. Judgment day. One. When deciding whether to accept or continue an appointment as a group auditor, what must the auditor consider? Must consider whether the group engagement team can be sufficiently involved in component auditor's work. Exactly. So the answer is C. J got it. B failed it. I'm sure he didn't engage in the lectures. C. A also got it. C. All right. Nice one. So the explanation, the group auditor must ensure they can be involved in the component auditor's work to obtain sufficient appropriate audit evidence. Exactly. So the group auditor is the driver, and he must ensure the component auditors are in alignment and sufficiently okay to perform the work. So B is wrong because a separate audit of each component is not always necessary. Some may only require analytical procedures. Exactly. So take note, the answer is C. All right. Number 2, A. I think everybody got it. A. Okay, why must a group auditor obtain an understanding of component auditors to determine if they will comply with ethical requirements and possess professional competence? Exactly. The group auditor must evaluate whether component auditors are competent and comply with ethical requirements, ensuring audit quality. Nice one. Everybody is good on that. Number 3, B. Everybody got it too. Okay. What must the group auditor determine for each component when component auditors perform an audit or review? A materiality level for the group and each significant component. Exactly. B. The group auditor must determine materiality levels at both group and component levels to assess the risk of material misstatement effectively. Exactly. Number 4, A. Everybody got it. Good. Julie is really awake. What audit procedures?
Yes, no. The first one, I sleep really dealt with me.
That's a good one. What audit procedures are required for a component individual financial significance? A. An audit of the financial information using component materiality. Exactly. So a full audit using component materiality is required for a component of individual financial significance to ensure its financial information is properly examined. Good one. And finally, C. A and J went for 100%. This is incredible. Involvement, okay, for significant components, what level of involvement is required from the group engagement team? Involvement in the component auditor's risk assessment to identify risk of materiality. Exactly. The group engagement team must be involved in the component auditor's risk assessment to ensure risk of material misstatements are properly identified and addressed.
100.
Exactly. Wow. From 60 to 100. And Ada is just coming, scored 100. That's good.
Hey,
That's good.
And
I audits is very nice. So this diet.
Sorry.
I scored 8 itself.
Wow.
Aisha said she prays audit is going to be nice this diet. Amen.
You don't mean it.
I pray so. I pray so too.
Nice one, nice one. We are doing well on this standard. So let's try to remember and also revisit it to have good understanding. Okay, so this is the last summary and the last ISA on this chapter 2, and that is using the work of auditors expert, which is ISA 620. Let's look at this before we go on break quickly. This ISA outlines. Okay, sorry, somebody's trying to say something. Oh, okay. This ISA outlines the auditor's responsibility when using the work of an expert engaged or employed by the auditor, particularly in areas like risk assessment and fair value and accounting.
Everybody can see your slide. You've not changed the slide though.
Okay, maybe your network has frozen. I'm on ISA 620 now.
Let me go out and come back again.
Oh, okay.
I can see your slides, sir.
Oh, okay. Aisha, please confirm I'm moving.
Yeah.
Oh, okay.
Yeah, I can see your slide.
Okay, Jamie, you may have to go out and come back. Let's be in alignment. Okay, so we're looking at the work of auditors expert, ISA 620, and looking at particular areas of risk assessment and fair value accounting. So the auditor's responsibility when using an expert is needed when an auditor does not have particular expertise in that area is auditing. Okay, Jay, please confirm you can see ISA 620 now.
I can see it, sir.
Okay, fantastic. All right. So still on the first slide, we're talking about the responsibilities of an auditor in using the work of an expert. An expert is needed when the auditor does not have the expertise in that particular area or some areas that you need expert reviews and expert opinions or valuations or fair value accounting in assessing the risk of the job he's doing. So this ISA emphasizes the need for auditors to determine the expert's scope of work, their competence and objectivity, and also evaluate the reasonableness of their findings. So the auditor, in using an expert, maybe he's using a quantity surveyor to value land, building. He needs to assess the competence, the objectivity, and the skill. And whatever it is their findings or recommendation, they also need to define this scope of work. And whatever the finding of the expert is, they need to reasonably check those findings if they are reliable. This is very important. ISA 620 applies only to auditor-appointed experts. So unlike the component auditors that are appointed by the board, the shareholders, maybe as recommended by the board of directors, ISA 620 experts are appointed by auditors themselves. So the auditors pay them and bill the company. So auditor-appointed experts are also covered under ISA 500, while the use of management, the use of management experts are covered in ISA 500, but ISA 620 looks at auditor-appointed experts. So the auditor assesses the need for an expert in his work, while ISA 500 managements are the ones that use experts. But this ISA is focused on 620, and this experts are not appointed by management or by the board or by shareholders. They are appointed by auditors themselves. So please take note of that. Very important. That will be the end. Very short IEC, but then by way of recap, the expert and specialists are needed to aid the auditor's work, not to take over the work. And the auditor's judgment comes to play in assessing their expertise, their competence, and their understanding of the job entirely. So the objectivity of the auditor is very important, and the reasonableness of their findings also come to play. So we have two standards in this line. For management expert is ISA 500, and for auditors expert is ISA 620. Okay, do we have any questions on this last ISA before we go into our test? Any questions, clarifications? I think it's very straightforward. No questions, no contributions, no observations. Can we go ahead with our quiz?
Yes, quiz.
Okay. So number one, why was ISA 620 revised? A, to expand the scope of using experts for various audit purposes. B, to eliminate the use of experts in financial audits. C, to require auditors to always engage experts for every audit. D, to allow management to appoint experts for the audit process. Why was ISA 620 revised?
D. I'll go with D.
A is going with D. All right. G, what's your pick? I is going with I is going with C. J is going with B.
No, I'm still looking. I've not.
Okay.
I haven't decided yet.
I thought I had your voice. Okay. A is going with D. I is going with C. And J is still perusing. Why was ISA 620 revised? To expand the scope of using experts for various audit
sorry,
purposes.
I want to change my option. My answer will be A, sir.
Okay. I is going with A.
Mine is A.
J is going with A. A, are you changing your mind or you are staying with D?
I'm changing my mind to A.
I'm A.
Yeah.
Okay, everybody's aligning with A. All right, we'll see. Okay, number two. What is one key change introduced in revised ISA 620? It now applies to experts engaged or employed by management. It mandates auditors to rely solely on expert findings. It specifies auditors' procedures for evaluating.
Are you number 2 now?
Yes, I've moved to number 2.
Okay.
Has my screen moved on your side?
It just moved now.
Okay. So we're looking at what is one key change introduced in revised ISA 620. It now applies to experts engaged or employed by management. It mandates auditors to rely solely on expert findings. It specifies audit procedures for evaluating the expert's work. It removes the requirement for auditors to assess an expert's qualification. What is one key change introduced in revised ISA 620? What's your pick? J, I, and A.
C.
I'm sticking to C, sir.
Okay, I is going for C. J is going for C. A, what are you going for?
Go for A. A.
Okay, A is going for A. She decides to go for her name A. All right. Number 3, under ISA 620, when might an auditor need to engage an expert? A, when evaluating risk assessment and fair value accounting. B, only when auditing financial statements. C, only when management refuses to provide information. D, when the audit firm lacks
Under A. My auditor need to engage.
I is going for A.
A. I choose A. Yes, sir.
Okay, I is going for A. Then J is going for what?
A.
A is going for A too. It's like today you are only going for A.
Mhm.
The J is going for so.
A.
All right, final answer A. Which standard governs the use of management experts instead of an auditor's expert?
Wait, hang on. Sorry. Number 3. Let me hold on.
Okay, under ISA 620, when might an auditor need to engage an expert? When evaluating risk assessment and fair value accounting. B, only when auditing financial statements.
Because A is okay. A is fine.
C, only when management refuses to provide information. D, when the audit firm lacks internal audit staff. Final answer A. Are you sure?
Yes.
All right.
Yes, positive.
Everybody A. Okay. Which standard governs the use of management experts instead of an auditor's expert? ISA 620, ISA 500, ISA 550, ISA 580. Which standard governs use of management expert instead of an auditor's expert?
B.
20. A. That's what we're doing.
A is going for A. I, what are you going for?
B, sir. I'm going for B.
Okay, J, what are you going for?
I'm still looking.
Okay. Which standard governs the use of management experts instead of an auditor's expert? ISA 620, ISA 500, ISA 550, and ISA 580.
I'll go with A.
Yeah.
Which one are we doing now? We are doing 620, right?
Yes.
Which one did we just finish doing?
I don't know.
We just finished doing 500 and 550.
I don't know.
Oh my goodness.
Yeah, no.
I go for B.
Okay, J is going for B. Final answer.
550. Is it 550 say for 500? I don't even know. Which one did we just finish doing?
I don't know. We all don't know. Final answer B, or you're going for A?
Please let me think first. Sorry?
I'm laughing now. You say you want to think first. Laughing. Which standard governs the use of management experts instead of an auditor's expert?
I think it's 550.
So she's going for C. Final answer C. Final answer?
Mm-hmm.
Okay, final answer C. Number 5. What must an auditor do when using an expert's work under ISA 620? A. Assume the expert's findings are correct without verification. B. Assess the expert competence and objectivity. C. Allow the expert to perform the entire audit. D. Use an expert only for valuation purpose. What must an auditor do when using an expert work under ISA 620? What are your picks?
I choose B, sir.
B.
I is going for B. J is going for B. A, what's your pick? Shall I assume you are going for A too? Is A going for A again? Hello, A, are you there? A is still thinking.
Sorry.
Oh,
Wait,
Aisha.
sorry.
I hope you didn't doze off a bit.
Honestly, I did.
Pele,
Sorry.
we are in question 5.
An auditor do when using
What
an
must an auditor do when using an expert's work under ISA 620? A. Assume the expert's findings are correct without verification. B. Assess the expert's competence and objectivity. C. Allow the expert to perform the entire audit. D, use an expert only for valuation purpose.
I think it B.
Final answer.
Activity, yeah.
Okay, final answer B. All right, so let's go to judgment D. Number 1, why was ISA 620 revised? Okay, everybody got it. A. To expand the scope of using experts for various audit purposes. Correct answer. To expand the scope of using. So the revision allows auditors to use experts not only for account balances, but also for risk assessment. Exactly. Good one. Number 2, it's what is one key change introduced in the revised ISA 620? Answer is C. It specifies audit procedures for evaluating
Network is really bad. I have to go out and come back. I'm still seeing number 5 question.
Oh, okay. That means your screen is not toggling.
On my screen.
Okay, your screen is not toggling. Maybe you go out and come back.
I have to leave.
Yeah, it's the network that is freezing. Okay. So number 1, to expand the scope of the audit, everybody got that. So the revision allows auditors to use experts not only for account balances, but also for risk assessment. That is correct. Okay, so let's go number 2. Which is one key change introduced in the revised ISA 620? It specifies audit procedures for evaluating the expert's work. Exactly. So the revised standard requires auditors to specify procedures, agree on work to be performed, and assess reasonableness of the expert's findings. Okay, so J got it, I got it, C incorrect, C picked A, and the answer is C. Okay, so number 3, under ISA 620, when might an auditor need to engage an expert? A, when evaluating risk assessment and fair value accounting. Correct. Everybody got this. Number 3 is A. Okay, so Jay, can you see my screen now? Jay is not on the call. Network is still misbehaving. Okay, so number 3, A. The revision acknowledges that experts are needed in areas like risk assessment and fair value accounting. Exactly. Number 4, which standard governs the use of management's expert instead of an auditor's expert? J picked C, wrong. I picked B, correct. A picked A, wrong. So ISA covers the use of management expert. ISA 500 covers the use of management expert, while ISA 620 applies to expert engaged by the auditors. So I stress that over and over again, but you guys were confused. So only I got this correctly. So the answer is B. Okay, and finally, what must an auditor do when using an expert work under ISA 620? Everybody got it, B. The auditor must evaluate the expert's qualification, independence, and reasonableness of finding. That is very correct. Okay. So J, 80%, 4/5, better. At least you didn't score 100%. I, 100%. Wow. He was really paying attention, 5/5. Then A, 60%, 3/5. That's nice. Nobody went below 60%, which is very good, and I like that. Okay. So that will be the end of section 2.3.